Welcome to the deep dive. We're here to cut through the noise, get past the jargon, and really pull out the valuable stuff from, well, often pretty dense reports.
Exactly. We do the heavy lifting, you get the insights. Think of it as your shortcut to being properly informed, maybe with a few surprises along the way.
And hopefully keep it reasonably engaging too.
We try.
So today we're diving into LMW Limited, Lakshmi Machine Works Limited, as they used to be known, a company with, as we'll see, quite a few different things going on.
Right. And specifically, we're looking at their unaudited financials, both standalone and consolidated for the quarter ending June 30th, 2025.
And these are hot off the press, right? Approved by the board very recently.
Just yesterday, July 17th, 2025. Same day they released the documents, so yeah, very current.
Okay. And just a quick note for everyone, when we say crores, that's 10 million rupees, so keep that scale in mind as we throw numbers around.
Good point. We're talking significant figures here.
Okay, so let's get into it. The big picture first. Revenue. Standalone revenue from operations for Q1. What did that look like?
It came in at 685.37 crores for the quarter.
Right. And how does that compare, say, year on year?
Well, compared to the same quarter last year, Q1 FY25, that's actually up. Last year was about 659 crores. So, a decent increase there. About 4%.
Okay, up year on year. That sounds positive. But what about compared to the quarter just before this one, Q4?
Yeah, that's where the story changes a bit. Sequentially, it's down. Q4 FY25 was closer to 789 crores.
Quite a drop then from Q4.
It is, yeah, around 13% lower than the previous quarter. So you've got this sort of mixed signal growth compared to a year ago, but a decline from the immediately preceding quarter.
Interesting. First little aha moment, maybe.
Yeah.
What does that typically tell you?
It could be a few things. Maybe seasonality, maybe specific market conditions easing off after a strong Q4, or maybe just, normalizing after a particularly strong previous quarter. Hard to say just from the top line.
And does the consolidated picture, including the subsidiaries, tell the same story?
Pretty much, yeah. Consolidated revenue was 694 crores this quarter. That's up from 673 crores a year ago.
Okay.
But again, down from the 804 crores they did in Q4. So same pattern. Up year on year, down quarter on quarter.
Got it. Okay, so that's revenue. Interesting mix. But profit is key, right? Net profit after tax. How did LMW do there?
Right. So standalone net profit after tax was 24.47 crores for Q1.
And compared to last year, Q1 FY25.
That's actually a really big jump. Last year, Q1 was only 12.49 crores, so it's nearly doubled year over year.
Wow, okay. That's quite a turnaround on the profit side compared to last year.
It is. Definitely suggests some improvement in margins or maybe cost control compared to 12 months ago.
Sense another butt coming.
Yeah.
How does it look sequentially?
I cast a Q4.
You guessed it.
Mm-hmm.
It follows the revenue trend. That 24.47 crores, while great compared to last year, is down quite a bit from the 49.1 crores in Q4 FY25.
Okay. And consolidated profits, same deal.
Yeah, same story, maybe even more pronounced on the sequential drop. Consolidated net profit was 11.47 crores. That is slightly up from 11.02 crores a year ago.
Okay, slight increase year on year.
But it's a really steep drop from the 47.82 crores they posted in Q4.
Right. So the big takeaway seems to be things look better than this time last year, but weaker than the immediately preceding quarter.
That sums it up pretty well for the headline numbers.
And I assume earnings per share, EPS, just mirrors this.
Exactly. Basic EPS, standalone, 2.91 this quarter, way up from 11.69 last year, but down from 45.98 in Q4. Consolidated, 10.74 this quarter, tiny bit up from 10.31 last year, but again, big drop from 44.76 in Q4. The pattern is consistent.
It really pushes you to ask why, doesn't it? What's underneath these numbers?
Well, to understand the profit, we need to look at the costs, right? Total expenses. Standalone was about 688 crores, consolidated around 710 crores for the quarter.
And that's made up of the usual suspects: materials, employees. Yeah, cost and materials consumed, employee benefit expenses, depreciation, other expenses. They all contribute. Looking at how those change would give more clues, but sometimes the really interesting stuff is in the exceptional items.
Yes, the one-offs that can swing the numbers. What did LMW have this quarter?
For Q1 FY26, they reported an exceptional expenditure. It was 1.29 crores.
Okay, an expense. What was it for?
The report specifically says it's compensation towards voluntary retirement scheme, VRS, opted for by employees. So basically costs related to people taking early retirement.
Right, so restructuring cost, important to note, is not operational.
Exactly. It's a one-time thing, but you absolutely have to see this in context, especially compared to last year.
Because didn't they have a huge exceptional gain last year?
Precisely. In the fiscal year ending March 2025, the standalone results had this massive exceptional income, 131.61 crores.
Wow, okay. And where did that come from? Not selling machines, I assume.
No. It was profit on the sale of investments, specifically selling shares in some of their wholly owned subsidiaries, the ones in China and the UAE, to their holding company, LMW Holding Ltd. In the UAE.
Right, an internal shuffle, basically, but it generated a big book profit.
Exactly. And don't forget, there was also a tax hit associated with that gain, about 12.9 crores in tax expense on the capital gains from that sale.
So it just highlights, doesn't it? You really need to strip out these exceptional items, both income and expenses, to get a clearer view of how the actual underlying business is performing day to day.
Absolutely critical. Otherwise, you're comparing apples and oranges, especially when looking year over year with that huge gain clouding the picture last year.
Okay, so let's peel back another layer. LMW isn't just one thing. They operate across different segments, right?
Correct. They break it down into three main ones: Textile Machinery Division, then the Machine Tool and Foundry Division, and finally the Advanced Technology Center. Looking at these individually is really where you see what's going on.
Let's start with the biggest, I assume. Textile machinery. How did their revenue look in Q1?
Yeah, it's the largest. Standalone revenue for Textile Machinery was about 415 crores. Consolidated was a bit higher, 424 crores.
Okay, and the trend here, following the overall company trend.
It is, but maybe even more pronounced on the downside. This segment's revenue is down both year over year and sequentially.
Oh, okay, down year over year too.
Yeah. A year ago, standalone was 440 crores, consolidated 454 crores, and Q4 was even higher, 493 crores standalone, 507 crores consolidated. So yeah, their main engine seems to be shrinking a bit at the moment, revenue-wise.
Okay. What about the Machine Tool and Foundry Division?
That's a different story. Standalone and consolidated revenue there was about 251 crores.
And the trend?
Here, we see that year-over-year growth we saw overall. It's up nicely from 206 crores in Q1 last year.
Yep.
It did dip slightly from Q4's 275 crores, but the year-over-year growth is strong.
Okay, so that's looking healthier. And the third one, Advanced Technology Center.
Pretty steady. Revenue around 46 crores, both standalone and consolidated. That's up from 39 crores last year, and basically flat compared to Q4, so consistent performance there.
Right, so revenue-wise, textile down, machine tools showing good year-over-year growth, ADC steady. But the real kicker is profit per segment, isn't it? Profit before interest and tax.
This is where it gets very revealing. Let's go back to Textile Machinery. Despite being the biggest revenue generator, it actually reported a loss in Q1.
A loss, seriously.
Yep. Standalone loss was 11.16 crores. Consolidated loss was even bigger, 24.16 crores.
Wow. So their core largest division is losing money right now.
Based on these Q1 numbers, yes, it's a significant drag on the overall profitability.
So where's the company's profit coming from then, if the biggest segment is in the red?
It's coming entirely from the other two segments. The Machine Tool and Foundry Division reported a profit of 12.39 crores, both standalone and consolidated.
Okay, solid contribution there.
And the Advanced Technology Center also chipped in with a profit of 4.04 crores. So you add those profits together, they more than offset the loss from textiles, leading to that overall positive, albeit reduced, net profit we discussed earlier.
That's the key takeaway, isn't it? The overall profit hides this internal dynamic where two segments are profitable and are essentially carrying the losses of the largest division.
Absolutely. It paints a much more nuanced picture of LMW's operational health than just looking at the consolidated bottom line. Really critical to understand that segment performance. #tag for the fine print and what it means for you.
Okay, good stuff. Now, just some housekeeping. The fine print side of things. These results are labeled unaudited, right?
Correct. Unaudited, but they have undergone a limited review by the statutory auditors.
What does that mean practically for, say, an investor looking at this?
It means it's not the final full audit that happens at year-end, but the auditors have looked at it, performed certain procedures, and haven't found anything that suggests major misstatements. It gives a level of assurance, but it's not a full guarantee. It's standard practice for quarterly results to allow for timely reporting.
And it follows all the regulations, SEBI requirements, etc.
Yes, the report confirms review by the audit committee, approval by the board, and compliance with the SEBI listing obligations and disclosure requirements, the LODR regulations from 2015. It's all by the book.
Okay, and just to remind ourselves, the consolidated figures, they include which parts of the LMW group?
Right. The consolidated results bring in LMW Holding Limited in the UAE, LMW Aerospace Industries here in India, and then the step-down subsidiaries like the Textile Machinery Company in Suzhou, China, and LMW Global FZE in the UAE gives you that broader global group view.
Good to know the scope, and if people want to read the full report themselves.
It's being published or was scheduled for publication today, July 18th, in the Business Line, English, and Hindu Tamil newspapers.
Okay.
And of course, the full details, the complete filing is available on the company's own website, www.lmwglobal.com. Hashtag outro.
Okay, let's wrap this up. A really interesting dive. The key takeaways for me, well, that mixed performance, right? Better than last year, but down from last quarter.
Yep, that clear year-on-year growth versus sequential dip. And definitely understanding the impact of those exceptional items the VRS cost this quarter versus that huge asset sale gain last year.
Absolutely crucial context. But the big one, I think, was the segment story.
Definitely. Seeing the machine tool and foundry and advanced technology center segments generating profits while the core textile machinery division reported a loss, that's probably the most critical insight from this quarter's numbers.
It really is. And it leaves you thinking, doesn't it? If your biggest division is currently losing money, what does that mean strategically?
Exactly. How does management balance that? Where do they focus investment? Do they double down on fixing textiles or lean more into the profitable segments? It raises some big questions about their future path.
So, a provocative thought for you listening. With this detailed view, what other questions would you ask L&W's management right now? How might they navigate this internal performance difference?
Yeah, something to chew on. It really shows the value of looking beyond headlines, digging into segments, understanding those one-offs. That's where the real story often lies.
Well said. Thanks for joining us for this deep dive. We hope it gave you some valuable perspective.
Thanks for listening.